Now, the rush to cash in on Asia's last truly frontier market is having some fairly predictable consequences. Myanmar property prices are going through the roof. As foreign investors have been pouring into Yangon, they've been finding that office space, residential space and hotel rooms are all in very short supply indeed. The property agent CBRE Group says prices have reached levels equal to some of the world's biggest cities, and they'll keep going up for several more years. Well, earlier I spoke to CBRE's James Pitchon in Bangkok and asked him to describe the conditions in the Yangon market.
Well, I think Yangon is like any frontier market where there has been very limited demand from occupiers for almost 20 years. So you've got very little supply that actually exists on the ground. The total amount of modern office space in Yangon is smaller than most office buildings in Bangkok or Singapore, talking about a total stock of about 40,000 square meters. And that would be grade B or C stock by Asian levels. So we're seeing rents, people asking rents now of 80, maybe next week it'll be $90 per square meter per month.
Is there a demand for that though?
I mean,
are they getting that kind of rent?
Yes, these buildings are full. They're full. You can join the queue. And people have got offices in hotels at the moment. So the United Nations had 5 floors in the Traders Hotel and are just moving out this year to other accommodation because the Traders Hotel, which is the premium business hotel, want the rooms back because they can make more money now out of using them as hotel rooms. But it shouldn't come as a shock to people because we've seen the same thing. When I was in China in 1987, setting up the CBRE office in Beijing, we had the same situation with people having their offices and living in hotel rooms and very little modern office accommodation. And an even bigger challenge, even less residential accommodation for rent. So the challenges in Yangon at the moment, if you want to set up an office, that you can't find space, the existing buildings are full, and your alternatives are to look at either putting an office in a condominium building, which are generally quite poor quality, poor electricity supply, poor internet connection, and then finding somewhere for your expatriates to live, where rentals again are pushed up. You're looking at a studio serviced apartment is $2,500 to $3,000 per month, and for a 3-bedroom, if you want to put a family in, you're looking $6,000 to $8,000 per month. So Myanmar long term, I think the pricing has got to be in line with other ASEAN countries that are their competitors.
Well, what exactly is the long term then, do you think? I mean, what's being done here in order to address the problem, and how long do you think it'll take before Myanmar does start moving towards the norm?
I think you would have to, if you look at Vietnam, and that took about 10 years, and we had the Asian financial crisis in the middle. So Vietnam opened up in the 1990s, and you couldn't get accommodation for love nor money. They had a floating hotel on the Saigon port because of the shortage of hotel rooms. And then the Asian crisis kicked in just as supply was increasing. So nothing is going to happen in the next 24 months that will alleviate the supply situation. So people looking to set up operations in Myanmar are going to find it difficult for the next couple of years.
When you say nothing's going to happen, do you mean that it's going to take time to put things into place, or are you saying that nothing is actually being done to address the issue?
Well, you can't address the issue because you can't have pop-up office buildings.
Well, isn't the government and developers, private developers, putting things up in order to accommodate the demand? So
property is always there's a big time lag between changes in demand and supply being able to come on. You can't just turn the tap on. So private developers are already responding. So the Kerry Group is developing Traders Square, a new office building just down the road from the Traders Hotel, and also they are going to complete some serviced apartments that they halted construction almost 15 years ago. So a little bit of supply will come on, but demand at the moment we think will continue to exceed supply. So private developers will respond, but like any frontier market, getting things done is not as easy as it is in, say, Singapore.
You've been in frontier markets before.
Getting your permits, securing sites.
You've been in frontier markets before. You say you've been in China, you've experienced in Vietnam. So put it in context. I mean, in the terms of the way China developed and Vietnam developed to accommodate this rising problem, is Myanmar on track, on the ball, able to deal with the problems?
Not many countries are like Singapore, where the government can turn the tap off and can turn the tap on again, and can act as a catalyst for new supply. This will be driven by private sector developers, and it's going to take time. So it will come, but for in the short term, let's say the next couple of years, it's a big challenge to people looking to set up an operation in Myanmar as to where they will have their office and where they will find accommodation for their expatriate staff.
So is it?
So that was a similar situation in Vietnam.
Is it so bad as to reach the stage where you might suggest that new investors should perhaps not even bother turning up unless they're prepared to really rough it, or do you think that there is enough to accommodate them, albeit in very poor circumstances?
I think the allure of Myanmar, the last great consumer market in ASEAN, to fill in the gap, companies have been doing this for over and over again, whether it is in Asia or whether it is in Africa. So the big consumer goods businesses already have some market penetration there through imports, but want to set up a better supply chain. They want marketing to the domestic audience, so they will go there. Once the market's opened up, if people are spending money, these companies will find a way to run their operations in Myanmar, even though it will be very challenging.